Hello, everybody. Hello, Marketplace Conference. I've been a longtime attendee and participant in this conference, and I'm really
Mike, I
excited.
think we have the 30 to count. That's when it goes live. So maybe another 20 seconds.
Okay, I thought three. No, we're live. We're live.
Sorry about that. That was my
We're
fault.
live. It's okay. No
That was
worries.
mine.
Hello. The joys of conferencing over Zoom. So hello, everybody. And I'm very excited to that point being here with you with KJ today. We have an exciting conversation that we've been looking forward to. So taking a step back, we'll introduce ourselves in a moment. But one of the questions that I always ask, there's a marketplace checklist that I published that you can look up online on if you Google my name and marketplace checklist. And whenever I'm analyzing a marketplace, I'm always wondering, does it get easier to add incremental supply as you grow your marketplace? Do you have, incremental supply or demand as you're growing? Do you have any kind of an advantage there? And one great way to do that is embedded finance and fintech products. And when I was speaking with the conference organizers, we kind of got excited about this topic. And KJ is the founder of an amazing company called ResQ that he'll tell you about that's actually doing just that. It's a marketplace with a SaaS component, and it wasn't originally started to be in fintech or have embedded finance necessarily. But they're finding that is a strategic part of the business, not just as an additional revenue line, but actually to add value to the core offering in the first place and to make the product more sticky with supply and make it easier, like we talked about, to add incremental supply. So we'll get into all of that. But first, why don't we start with backgrounds today? So KJ Singh, CEO and founder of ResQ. That's ResQ, by the way, for those who want to spell it. And the URL is getresq.com. Do you want to talk a little bit about your background? You've got such an interesting life story, and then how you came to this, and then we can kind of go from there.
Absolutely. Thank you, Mike. And hello, everybody. Pleasure to be here and pleasure to be chatting with you, Mike. A bit about my background. I started my career, I was fortunate enough to start my career in venture. Prior to that, did a couple of years in private equity coming out of the University of Waterloo, which is where I came as an international student, originally being born and raised in the Middle East. But did a couple of years of private equity, and then a serial entrepreneur took me under his wing and started a venture capital firm, literally from ground zero at a coffee shop in Toronto. And we'd scale it to a very successful fund over the course of 8 years. We raised 250 million across 3 funds and did a lot of interesting things, including investing in seed and Series A stages of marketplaces and SaaS companies. And somewhere along the way, met a restaurant operator that was operating a small bakery-style restaurant. Strong top line revenue. We're talking close to 1.4, 1.5 million top line revenue. But still at the end of the year, they were losing 50 to 20% on net margins because they were struggling managing their business on the back end. And they wanted to get out of the business. And me being an entrepreneur, I decided I was going to do that. I can take that business and turn it around. And I ended up buying that restaurant while still operating at my VC firm. And right off the bat, saw the pain point around restaurant operations. Realized even at that time, which is a few years ago, over 50 to 60% of our revenue was actually being driven off of technology at the front of the house. You talk about delivery, reservations, tons of catering, but back of the house was underserved. And after seeing many challenges ourselves, I think the classic thing I tell everyone is the most innovative thing we had done at our restaurants was Post-it notes on refrigerators with the name of contractors that we were going to call.
So let's pause there. You were a VC. You had a successful career as a venture capitalist, investing, tech. You were all good, and you decided that you wanted to become a single location at first restaurant owner. I mean, that's a tough business.
Yeah, absolutely is. When I looked at the restaurant, first of all, many things at the restaurant were going well. You looked at a cash flow, a strong top line business, good brand, good food. I'd always been very intrigued about the restaurant vertical. As family roots, I come from the services industry, and my family does as well. And when I looked at this restaurant, I saw this just an extension of what I'd done in the past during my childhood days in some shape or form. But when I looked at the business, all I saw was a restaurant with strong top line revenue and needing some good business acumen to be able to turn the business around. And that was my thesis going in. The business, the acumen that I'd learned over the course of the years, I can apply it to the restaurant setting and try to turn this business around. in short, that thesis was out of the window within the first 6 months. I lost more money in that business than the previous operators did, which now talks about the uniqueness of the restaurant. It's not a traditional business. It requires a lot of hand-holding, a lot of operational expertise over time. And ResQ as a journey actually started from there when I started to see the pain point of consistent back of the house challenges, especially on repair and maintenance, many times losing tens of thousands of dollars in revenue and inventory by not being able to handle this part of the business effectively. And decided that I can create a operating system at the back of the house that allows restaurants to focus and operators to focus what they do best, which is the food, the menu, the guest experience, which is why I got in the business rather getting sucked into the back of the house. So that's the birth story of ResQ.
That's really helpful. So, and then I'll give a little bit of background context on myself as well. But before I do that too, why don't you just give the, one sentence or even 30 seconds high level ResQ, so people kind of have that floating in their brain now that we got to the kind of founding story. And then I'll give my background after, and we'll come back and go into ResQ and embedded finance in more detail.
Yeah, absolutely. So we're a SaaS-enabled marketplace that allows restaurants to manage the entire repair and maintenance experience. Everything from finding and managing, finding contractors to managing them to paying for them all on a single platform. It is at the most basic level, we build local marketplaces in every market that we are in by aggregating demand and supply. And then we surface that with a SaaS product that allows restaurants to put in tighter controls, top-down workflows, integrations, and sort of really embedding deep into their workflow. But at the most basic level, it's a SaaS-enabled marketplace for restaurant repair and maintenance.
SaaS-enabled marketplace for restaurant repair, maintenance, back end in general. Although when we say back end here, we're not talking back end like server infrastructure, back end tech necessarily. Could get there one day, but right now, back end for a restaurant means, plumbers, heating and air conditioning, and all kinds of stuff that we'll get into. And that labor supply is hard for restaurants to find. And so that's a big part of what ResQ does. So my quick background and maybe how I ended up meeting KJ and how we know each other. So I started life as a computer scientist and started in startups young 20 years ago. After doing grad school, I started in venture capital 15 years ago at a place called Summit Partners, investing in later stage companies. But I decided, hey, I want to invest early. I started getting fascinated, by the way, with marketplaces really early on. Even in grad school, I had this amazing professor, Tom Eisenman, who had this class that was ahead of its time called Managing Networked Businesses. I think half the students who signed up thinking that we were going to talk about like Cisco and routers and networking, but it was actually about network effects, which weren't very talked about, 15 years ago. And he's one of the pioneers academically in that field. So all these questions I've got in this marketplace checklist I spoke about, a lot of that comes from that, old academic work that's really interesting around supply, demand, liquidity, average time to transact, all this kind of stuff. And so I started looking for those kinds of businesses investments. But I also decided, hey, to be a really helpful VC, to help someone like KJ and actually serve on the board and do all that, I wanted to go get more operating experience. So I spent 10 years building companies. I co-founded Stitcher, a personalized radio company. I was at TrialPay, a payments company. And I spent 7 years as a Yelp executive. And we were, you could look at us at Yelp as a marketplace. I also partnered with 200 other companies, largely a lot of them marketplaces, and acquired a leading food delivery marketplace, Eat24, that I ran as CEO for 2 years. So I got a big look at a lot of these areas there, and especially in the food tech ecosystem, which connects to KJ. And then I went back into investing in 2017, 4 years ago. I serve on 5 boards, made 20 investments before that. And the most recent, or actually now there's been one more, but just recently last month announced that I would be leading investment in ResQ. And I'm at Canvas Ventures now. We invest in Series A and B, including marketplaces, fintech, SaaS, and digital health. And so I joined KJ's board. We co-led a big investment round with Tiger Global, who's also doing Series A's now. So that was a fun one to partner up with. And some seed investors, Hunter, Walk, and Satya from Homebrew, introduced me to KJ first and said, hey, you've got to meet this guy. And he's got an amazing business and so much ambition and a big vision. And at first, this restaurant, back of house, it didn't sound as glamorous a couple of years ago when we first connected. And all the innovation was on front of house, like KJ will tell you. And everyone was interested in, toast and square and food delivery apps, and then with COVID, there was a DoorDash boom. But actually, when we did our work and we looked at this, we said, hey, and KJ opened our eyes. Restaurants, just I think in the US alone, make $1 trillion in revenue, but 900 billion of that is spent on costs. And so where do these costs go? Where's the software product to manage that? And we started looking at this whole ecosystem. And then, right around that time, KJ was raising his round, and it became really fascinating. So this, I think it's a good segue. Let me hand it back to you. So tell me about the pitch. Why did we at Canvas Ventures get so excited about your business? Why did Tiger get so excited? And why are so many other people, all the amazing, you can talk about some of the strategic individual investors that you announced that have also invested in the round. I don't know who's confidential and who's announced, so you can share those.
Everyone's
got everyone so excited?
Yeah, absolutely. Look, what's happened over the past decades, and more importantly in the past couple of years, is innovation in the restaurant space really started from the POS system, then started touching the front of the house, whether you look at delivery, reservations, order ahead, and now sort of the entire ecosystem that's coming at the front of the house. But you nailed it right on the head. Over $1 trillion revenue market in North America, out of which 900 billion plus is spent on cost. And those cost line items are fairly split equally between a third on the food side, a third on the labor side, and then a third in these complex back of the house pieces, which includes repair and maintenance, but over time, equipment and many other sort of complex pieces that restaurants don't have the skill set to manage in-house. And many times those become a major factor that starts to impact your revenue, starts to impact your cost. Like I can give you a perfect example. If your fryers are going down at a fast food restaurant, you're not serving fries. If your walk-in freezer goes down, which it's happened to me at my restaurant, you have a major inventory problem. So really, when these things, when equipment and general facilities not handled or maintained correctly, it starts to impact your top line, your bottom line. It becomes a much bigger sort of item. So we started there and really saying we can create a marketplace that allows us to, by aggregating demand and supply in a single marketplace, we can create a much better a 10x experience, both for the restaurants and our service providers, which are local plumbers, electricians, HVAC, refrigeration techs. It's a B2B marketplace, but at the most basic level, it's allowing restaurants to get a service done in a cheaper, better, faster manner. And we can talk about how we're doing that. And on the supply side of the business, it is driving demand. It's driving embedded finance products, which is really the core of the discussion today. And then we've layered that with the SaaS product that allows multi-unit operators to put in tighter controls, measures, budgeting, data and insights on repair and maintenance, and a bunch of other sort of core pieces to the business that allows them to create this integrated experience. So that's the most basic level for us. I believe innovation in the back of the house has started to happen, in the last few months. We're seeing great companies like DoorDash win at the front of the house, excellent providers like Toast that are really crushing it in the market and in that sort of POS space, and now expanding into other verticals. I believe there's an opportunity now to play in the back of the house, and that's exactly where we've started because it's such a mission critical part of the business. And if you look at a cost line item for a restaurant, definitely revenue is driving, but margins are getting tighter and tighter. And I believe there's some line items at the back of the house on that P&L that can be optimized to drive better margins at the end of the day, which is extremely crucial for restaurants, given the tight margin profile.
Very cool. Okay, so now that we have a pretty decent idea, right? So the supply side for you are these techs, service professionals, skilled labor. By the way, one of the reasons I was really excited, if you read the articles where we announced the funding, one of the reasons I was so excited about the company is this theme of also rebuilding the middle class, in North America and the entire world, and giving people a vocational path where they can get skills and actually level up and make a stable income where they can provide for themselves and a family, through tech companies and B2B labor marketplaces, beyond some of the gigs that are available to them today, where sometimes it's tougher to make that all work. So I thought that was actually really fascinating. So that's the supply side. If you want to picture all those trades you were talking about, plumbers and heating, air conditioning, all this stuff. And then the demand side is, presumably restaurant owners and managers hiring for the supply. So talk about now, let's get into the meat of it. And what do you do when it comes to embedded finance? What's that value proposition? Maybe list the different products or offerings that you currently do or thinking about, and who is that for, and why do they care?
Yeah, absolutely. So you're absolutely right. It's, our vision is essentially to create economic empowerment in the service industry. And when we think about the service industry, there's two elements to it. Definitely a broader service industry, but for us, it's the restaurant services industry and the blue collar service industry. The blue collar service industry, when you look at plumbers, electricians, HVAC techs, and some of the skilled trades, has been an underserved market. Whether it comes to tech innovation, there's a lot of great companies doing this in the residential space, but tech innovation generally has been laggard. Secondly, if you start to think about payment terms, classic example, this industry is still sitting on net 30 to net 60-day payment terms. While as a plumbing company, if we've got 5 plumbers, I'm more likely than less paying my technicians or my employees same day or faster service, because the market's getting
They're losing
very
money.
competitive.
So because these plumbing operations are small businesses, and they're losing money. They have to pay people out right away and then float that money.
Yeah, and a lot of times, getting, especially if you're a new company in the market, getting payment terms on parts is incredibly difficult. And then you start to think about like the major sort of financial infrastructure behind it. Banking services and banking products are not built for them. You go to a bank to get a credit card, it's cash collateral up front or personal guarantees on loans. So if you think about like all the right infrastructure you need, which you've seen innovation that's happened in the e-commerce space or the online space in general or other industries, most of that infrastructure is built out. Our vision around that is really to create that infrastructure and create a business in the box concept for the supply side of the industry, which means attracting great service providers into the market and show them a pathway to make this their career. Gig economy is a great example of what's happened in that space, but a great plumber or a great HVAC tech can make anywhere from $50 to $70 an hour, which is really, if you think about it,
that translates to $100,000 to $140,000 annually, just to put that in perspective, right?
And that's where we're starting today. We've at the most basic level, we aggregate demand to drive more volume to our service providers. But we own the transaction flow. So essentially what we have done is every payment from the restaurant direct to the service providers flows through ResQ, which allows us to decouple the payment terms and be able to offer preferred payment terms on the service provider side. We're doing some interesting things anywhere from net 15 to net 0 days, and soon moving to an instant payment world. And beyond that, then it really becomes how we leverage credit and lending and insurance products to drive a much better infrastructure to make this to create economic empowerment in the services industry. So when we think about for us, it's a core offering of our product. Starts with today owning the payment flow to over time, faster payments, credit, lending, insurance, and many of the other things.
So to make it really tangible for everyone, if you had to enumerate it, like how many different products are kind of available today or over the course of the next year? Are there 3 core products? Like how would you delineate them?
Yeah, so the service offering on the service provider side today is opting into the marketplace, which is essentially a driver for growth and driver of revenue for them.
Yep.
And with that comes in basic payment terms, which is net 30 essentially on both the sides of the spectrum. But the product offering that they can opt into is net 15, so better service terms. But soon we'll be launching a net 0 day payment program, which is literally a few days away.
So that's one.
That's one. The second thing that we're also starting to test around with is using that as sort of a core offering for any sort of supplier on their customers beyond even ResQ customers. So really using that infrastructure, which we're calling ResQ Pay essentially, an infrastructure to drive payment terms across an entire spectrum of customers. That's the second thing that they're going to have an opportunity to opt into. The third part which will launch in the new year is going to be around credit and lending. If you look at sort of the companies operating in the space, the service provider network, you will whether it's credit cards or whether it's upfront payments to buy parts, or whether it is I need to buy a truck because I'm expanding my business, I'm going from 3 to 5 techs, all that requires cash flows up front, or a good lending program. And that's going to be the next version of product that we'll offer in that space.
Okay, that's great. That's really helpful. Now, just to give people who are less familiar a sense of where you're at as a company, we mentioned Series A. That was, I think, all in all, the headline number was $39 million Series A. So it was a large Series A. And how many employees are you at now?
So when we signed the term sheet, we were 55, just shy of
Yeah,
60. We are as of yesterday 100 employees.
100 employees. So you're growing really fast. So Series A, quote unquote, but the new Series A means you're a little bit further along. But still, in the grand scheme of things, compared to public companies like Square, which we could talk about when we think about embedded finance, you're still, in the very early days. Do you think that this is something that a lot of other marketplace startups will continue to do? And like, do you think it's half or more of all marketplace startups, if we have founders here kind of listening in, should be thinking about embedded finance and fintech? And what stage should they be thinking about it at seed, or is that too early? Series A, later? It probably depends, but I'm curious where you think the median would fall out on that.
Yeah, so it's a great question. My view on this is I'll sort of split it into B2B and B2C marketplaces. I think I think there is a world that this works really well in the B2C space, and we've seen innovation in that, whether it's Instacart or Uber, and many of the marketplaces have tried, and the success of it is still TBD in some shape or form to see how large scale those products get. I think in the B2B marketplace arena, embedded finance is a very core product offering. And
Is it table
my view on
stakes?
this, I think it's table stakes. Exactly what I was saying is
Interesting.
for us from day one, we never said we're going to get to this at some point. We are building it and rolling it out while we're a Series A company. So this is not something we would have gotten to maybe 2, 3, 4 years down the
Mm.
road when we had tens or hundreds of thousands of restaurants. To us, to drive better value creation on both the demand and the supply side, this is table stakes. So I believe it's table stakes very much with B2B marketplaces. And that answers your second question. I think founders should be thinking about this very earlier on, because it can create a very good lubricant, or the sort of the oil behind the engine that can make the engine run much faster. Many times, especially in our marketplace, sometimes, as we know, it's a supply constrained market because of the lack of supply in the market today. Finding good service providers is becoming more and more difficult, and that's because there's a lack of supply in the market. But when that happens, everyone in the market has got a lot of demand because competition is low, and getting jobs is not that difficult. So you can use these tools like embedded finance to really drive incremental value creation for them. So I think it's very much table stakes in the early days.
That's really helpful. That's fascinating. I wonder if you think, I would say probably most founders who are attending the conference here identify themselves as part of the marketplace community there. I'm a marketplace founder. I'm building a marketplace. Do you think the very nature of the company changes and it becomes a fintech, which we all know fintech is very hot as a category right now? Or do you think these are marketplaces first and fintech is kind of a bolt-on? How do you think about that?
Yeah, it's interesting. When we were going through this fundraising round and met some great investors along the way, it was very interesting to see how we were being categorized. Some
Yeah,
put us in the restaurant tech bucket. Some put us in the blue collar tech bucket, which is something new I've heard.
yeah.
Some put us in the fintech bucket. So look, I think if you sort of go back to what I mentioned earlier, which is, if this is table stakes for you and you're going to own the payment flow and you're going to use the payment flow to drive value creation on both the sides, then yes, you are by default a fintech company from day one, because you're touching into or tapping into the payment flow. So yes, I do consider ourselves a fintech platform, but that does not change how we sort of think about going to market or how we create value. To us, this was something we wanted to do from day one, and it's been tremendously successful.
So, who are some companies you look up to who you think have done these kinds of things well to use as examples? You mentioned Uber and Instacart have run experiments. The jury's still out. Uber does have Uber Wallet and additional services you see, and some payment terms obviously for drivers. So they've gotten into this. Is there anyone else you look up to?
Yeah, I'd say on the B2B side, certainly Fair is a company that
Yeah.
that we relate a lot to, because I think in some shape or form we believe we're doing this in the restaurant back of the house space than they are doing on their side of the marketplace. And I think
Hmm.
one of the key drivers for them from day one has been payment terms, and they were able to drive a lot of value to both the demand and supply side. So Fair is one that we look closely at. Square is another one, even though much larger company, and certainly at a different stage. I think they're doing tons of innovation on this side, but those are two companies that were looking at in terms of what are the type of products they take to market and how do they go to market around them.
Cool. Well, we're coming up, believe it or not, time flies. We're down to just 5 minutes left, and I think we're supposed to leave 1 or 2 minutes for transition. So I'll just pause here for a moment and see if anybody in the audience has any questions. They'll give it to us by Zoom chat. Let's see. I've got a few more questions for you, but I just want to see if there's any top questions. There's already one comment we got from Lyle Cresswell, who says that creating economic empowerment and offering opportunities beyond gig is so good to hear for a change. And so I appreciate that. It's not a question, it's a comment, but really appreciate that, because that's the theme that we're really touching on. And I think it's really interesting. We've got another question as well, saying, hi, is there a limitation regarding prices of the products which makes sense to offer embedded finance features for? For example, if there's like a 7-digit B2B transaction, could you all of a sudden start taking too much risk to outweigh the benefits at those large price levels? I've got one quick comment there, and then I'll hand it to KJ, is there's a company called Fly Homes that I'm on the board of as well. And KJ knows the founder of Fly Homes really well. They do 7-digit transactions all day. It's in the prop tech consumer kind of real estate area that we touched on. And they built embedded finances just at the core. They help people make all cash offers on homes, help people trade up their homes so you could buy a home before you sell your other house, which is a big stressful thing that they help solve for people. And so they're floating these 7-figure things they set up. And I think the amazing thing about how advanced the global capital markets are, a lot of founders don't realize there is some finance person somewhere in New York, London, Hong Kong, like there's somebody somewhere who can solve whatever crazy financial situation you have so that you don't necessarily have to take the risk. I think that would be my take, and Fly Homes shows that. But KJ, I'm curious if you have anything else to add or another take on that.
Yeah, absolutely. So Mike, you called a great example. It was actually one of the examples I was going to mention as soon as I saw that 7-digit number. I think they're doing a tremendous job at this, and you can absolutely de-risk it. I mean, even for us, we're by no means anywhere close to 7 digits, but our average order value is upwards of $500 an order. An average restaurant does between 4 to 5 jobs a month. So you can think about the average spend, being sort of $2,000, $2,500. It is much higher than a food delivery order or a Amazon delivery order. So we had to think about this quite in depth. And I think the way we sort of thought about this earlier on was, don't offer it to everyone. Find your best suppliers or demand whichever side you're going after. But for us, it was finding the best suppliers that were consistently showing great ratings, good turnaround times, very low default, offer it to them and slowly start to increase the risk profile. What we've seen right now is the benefit of this far outweighs the risk associated with it.
Yeah, I think that makes a ton of sense, and I would agree. Another question that came up is, what are a couple of major barriers to embedded finance acceptance by clients? So if you hear objections, what are those?
So on the for us on the supply side, actually, we don't hear a lot of objections because the classic thing I'll say is the NPS score or what's out there in the market is so low that when you look at something like payment terms, it just comes across as something very positive. So yeah, we have a very high acceptance rate, very, very, very high in terms of suppliers opting into it. So we haven't seen much of a pushback yet, but I'm not sure, Mike, if you've had a different experience throughout your other portfolio companies on this.
Yeah, I think, look, as long as you're adding value, to your point, not only is the NPS high on this, but I think the NPS can get high on your core product offering itself, right? That's the interesting thing, is you're actually improving the product experience for the demand or supply. I think that gets really fascinating. I will, with, let's say, back to home buying and some of these other verticals, there's always, if you have a big platform and a consumer or a business is going to trust you with a large amount of money, there's some counterparty risks they might wonder about, like, okay, how solvent are you? The smaller the dollar size is, the less that's an issue. The larger it is, maybe they start thinking about that. But that usually can be pretty easily overcome. And to your point, any benefits outweigh risks, and even in the customer adoption mind. So we're down to the last minute. I think we're supposed to break here to give transition time. So appreciate the time, KJ. That was great. KJ from ResQ. Check it out. KJ, how should people follow you on social? I'm on Twitter at @newmike. And KJ, where do they find you?
On Twitter, Kuljeev S, and also on LinkedIn, Kuljeev Singh. But real pleasure talking to you, Mike. Thank you so much for the opportunity. And
thanks,
really enjoyed the
everybody.
conversation.
Appreciate it.
Thank you. Bye now.
Bye-bye.